Nick Cup here with another episode of Morning Minutes. I believe it's episode 7, hoping to come at you with some simple, smart advice. So today what I want to talk to you about is a common concern we get among retail investors, and that has to do with I'm concerned that my portfolio won't withstand the next market downturn. Okay, so like I said, very common amongst retail investors, and it's this fear that their life savings or it's going to go up in smoke during the next market downturn or something of that nature. Okay, so typically I find that people who share this concern are usually ones that don't have a plan in place, ones that don't have a financial plan associated with them. Okay, again, running into this situation, it's people that are usually just, they're blindly invested with no real purpose or no real goal. It's just, I have a bunch of money, right, that, I'm saving and this and that. And, it's invested in something. I'm not really sure what, but, it's for retirement though. I mean, that's about as far as the extent as they're involved in their financial situation. Okay. And I mean, when it comes to investing, I don't think that's the right approach to take. Okay. I mean, that strategy effectively is just, you're hoarding cash and then, dumping it into a bucket or something like that. I mean, I guess it's not the worst thing in the world you could do, but I feel that there's far better ways and far more efficient ways of going about it than that way. Okay. So I think this fear of a market downturn is present simply because people are not aware of their financial situation. All right. There's a disconnect. Okay. So my belief is that stress, fear, anxiety, whatever you want to call it, stems from the differential between expectations. So what our expectations are and what our reality currently is. Okay. So our expectations, let's when it comes to retirement planning, let's say, our expectations at retirement are, okay, when I retire, I want to have enough money that will allow me to, live the lifestyle that I want. Okay. So that's the expectation. Okay. The reality is most people don't know how much they need to save to have that lifestyle that they want in retirement. They don't know what they have to do in between there, and a bunch of other things. Okay. So that's their reality. The expectation is here. Anything in between that, I would say probably 95% of all financial anxieties or stresses lie between in that area, from what your reality is, today, to your expectations. Okay. And I think what bridges that gap is having a financial plan. Oh, of course, a financial planner saying have a financial plan. What else is new, right? Now, when it comes to these things, when it comes to these concerns, I do want to leave you with a tidbit or whatever you want to call it. And it has to do with my third philosophy when it comes to, bulletproofing your finances or something like that. Okay. It might sound really cheesy, but it's super simple and it really, really works. Hear me out. Focus only on things that you can control. Okay. So what are things that we can control from a personal financial framework or an investment framework? Costs and taxes matter. Number one. Costs, so your fees, when it comes to your investment portfolio and the management of it and the construction of it, they're important because that's going to reduce your rate of return. Same thing goes with taxes. Okay. Not only where your assets are held, whether they're in registered accounts or non-registered accounts, taxable or non-taxable accounts, that is important, but also with the portfolio construction. Is your portfolio high turnover, right? Is there a lot of buying and selling? Well, a lot of buying and selling, it's a disposition of an asset, right? That's a tax consequence associated with it. That could mean more taxes. With more turnover, likely means more transaction costs. So that, increases that. So, be mindful of that. And again, that to an extent, that is something that you can control, okay? Next is asset allocation explains performance. Okay. You can determine, or you are in control of how much of your money you allocate to certain assets. If, how I can control how much I want to allocate towards my, stock or equity portfolio, how much to my fixed income or how much in cash and, so on and so forth. And anything in between that, you are in control of that. Okay. You are in control how much of my money I can allocate to, riskier things or, safer things, let's say. Okay. Now, by allocating more money to safer things, my portfolio return and volatility might go like this rather than, like this on this side of the spectrum. Okay. And that brings me to my next point, that risk and return are related. Okay. Generally speaking, the more risk you assume, the more risk you take, in any sense, you demand a higher rate of return for that. You demand a bigger reward. Okay. Again, that is something that you can control. Okay. Which is it's a beautiful thing. You can control how risky to make your portfolio. Again, coming from a personal finance framework. Okay. I've made a video on this before. The next point is diversification is essential. Don't put all of your eggs in one basket. Okay, have your eggs in multiple baskets, in multiple industries, in multiple companies, within multiple countries, and all of that. Okay, so diversification is essential. And again, the beauty of it, you can control it. Okay, you can control how much you allocate to these various buckets and whatnot. And then lastly is investment behavior is important. In any sense of the word, your behavior is controllable, pending you're of sound mind and all of that stuff. But your behavior is controllable. Okay. I drive a lot. I sit in traffic a lot. Sometimes traffic gets me, not to say angry, but it irks me. Right. But that is a choice that I'm making. I'm allowing, the situation have an effect on me, and I have an emotional response to it, anger or stress, or like whatever your reaction is when sitting in traffic. The same goes during your investment time frame, right? If the market dips, again, that might affect your behavior, right? But again, you can control it. Don't let it affect your behavior. Okay. And again, the beauty of all those things that I said, they're all things that you can control. Right? Pretty simple in theory, a little bit harder to do in practice, but definitely very, very important. Okay. All right. Hope you guys liked that one, and look forward to your feedback and making some more videos. All right. Take it easy. Bye.